So VIX now is now on our major trend line. This is the major trend line that we have on a daily time frame. If you check on your chart, have this trend line on the daily, you'll see that it was respected for quite a long time, and that's where VIX is currently. And we expect some beautiful buying opportunities on this trend line. So it can come there, maybe come back down, then boom, all the way like that. So here it can go up here, maybe come down, double bottom before shooting up. Because one thing that I expect is for price maybe to, if it's going to follow this same channel that it has been following for quite a long time, because this is one channel, this bottom channel, okay, this bottom line, and this top line. It's now one channel. It's now one, this is a major channel now, a major channel that it has been following. So if ever it's going to follow and respect that, right now we currently expect buying opportunities. On a smaller time frame, we're supposed to be expecting and looking for buying opportunities. This will be the major target for that channel, this whole channel. So now all the buys, we're supposed to hold them up until it reaches there. Then from there, it sells. So it's still a continuation of this whole major channel. So now we simply anticipate and look for buying opportunities, because we also have this trend line as well. This was a trend line for this downtrend that was happening here. This downtrend that was happening here. So we also have this channel. So here, buys can happen in this channel. Outside this channel, it's simply an opportunity for more buys. So the first initial buys are going to be inside the channel. The next ones outside of this channel that we have. So right now we expect buying opportunities on a smaller time frame perspective. We currently expect buying opportunities. Buying opportunities. Right. So here we are. This is a 4-hour time frame. So another thing that you can do, you can also add that channel that we had from the beginning, which was something like this. This can also guide you for some entries, because it was rarely broken on a 4-hour perspective. It wasn't even broken. It was maintained all the way since price started selling. That channel has been maintained like for quite a while now. So this is the channel. This is the channel. This is the channel. So what we want here is a break of this trend line. A break of this trend line will give us buying opportunities. Then if price does not come back down, it's still okay. It will still be okay. It will still be okay. It will still be okay. If price does not come back down and form maybe at our bottom, it will still be fine. It will still be fine. If it goes back inside, plays around inside, it will still be fine. We'll still take opportunities upon the next breakout. So here, this breakout, we are saying we're going to take buying opportunities, but when price reaches here, we need to notice the reaction that is going to give us, because most of the times price likes to do this. Double bottoms, double tops. VIX loves those ones. Double bottoms, double tops, double bottoms, double tops. VIX loves those ones. So just in case it doesn't happen, would still be in. Will still be in. Will still be in, even if it plays around there. We'll enter again on the next break. We'll enter again more buys to that next level up until we reach the top of the first channel that we have to the downside. Because this is the this is the the channel for the downtrend that has been happening. Once this one is broken, it's simply an opportunity for what? For more buying opportunities for us, up until we reach that top level of the major channel that we have on the daily. So this is what I'm currently looking at. This is a channel. This is a channel. So right now we're expecting buying opportunities, buying opportunities are what we're now looking forward to now. Was we're at the bottom of a channel. We're at the bottom of a channel, and at the bottom of a channel, we expect price to go up. So it's always a repetition. This price is always repeating the same things over and over again, over and over. So long we're in a channel, price will always bounce from the bottom to the top, bottom, top, bottom, top, from the bottom to the top, from the bottom back to the top. Here it almost reached but didn't reach, came back to the bottom, top, bottom, somewhere, top. So it's simply a repetition of the same things over and over and over again. What you simply need to do is to identify the repetition, to identify the major channels, the major right. So as I was saying, this thing is all about a repetition of patterns. For example, this is a channel. Whenever you're in such a channel like this, you always know that on the bottom of the channel, we buy. Bottom, buy. Top, sell. Bottom, buy. Top, sell. Top, sell. Bottom, buy. Bottom, buy. Top, up until it breaks. If it breaks now, you buy more. You buy more. So that is how you trade channels. That is how you trade channels. Whenever you identify a channel like that, bottom you buy, the top you sell. Bottom you buy, the top you sell. So right now we're at the bottom of our channel. We're at the bottom of our channel. What we now want is breakouts on that bottom of the channel. For example, if you check here on the bottoms of the channel, what I mean by breakouts, this is a 4-hour time frame. This is 4-hour time frame. I'm just referring to something like this, right? So this was the trend line that was being followed. The break, this break retest happening on a 4-hour perspective. This was a very, very beautiful sign that now we are going, happening on a 4-hour time frame.
Okay.
So now we also want the same things to happen now. If you check even here, the top, as price was now formed a double top, formed a double top there, formed a double top, and also broke some levels as well. If you check here, if you zoom in nicely, you realize that we had a level of resistance. We had a level of resistance, which was here. This is a level of resistance. That is a resistance, the support, I mean, a level of support. This is a support that could have determined your entry, your sell entries. Support broken. After being broken on a small time frame, you could have entered. You went all the way. Price went all the way to that area there before it began coming back to test that area again. So there you could have made some money there before it came back to pull back like that. So this pullbacks on a smaller time frame, you realize that it will be a break of a small channel. If you go to a smaller time frame, you realize that before it even reaches where you entered, it will actually be a break of a channel. This will be the channel, break the channel, come back to test the level, then go. So there were 2 opportunities to sell. The first one here, the second one there. all the way, all the way, all the way to the bottom. At the bottom again, same thing, we do the same thing. We want the breakouts to happen. We look at the lower high. Where is our lower high? Our lower high is this one. We want that lower high to be broken. We actually want that lower high to be broken, and also the trend lines that we have to the downside to be broken. The break of the lower high, retest, went all the way, came back again, went, came back again, went. So there, the opportunities are many. You would have bought this one, you would have made money. This is 2 days, came back again. This is almost a day, came back again, went all the way now. So a lot of opportunities will arise whenever price is either at the bottom or at the top of a what? Of a channel. Trend line broken. Here, after this breakout and closing above here, you could have entered even an earlier buy there. Then this break of this lower high and the retest, more buys. Same here, same here. Just like that, same here. Here as well, double bottom. You also had the trend line here. You also had the channel. You also had the channel there. We also had the channel like this. We also had the channel like this. That was a channel. Right, so this channel now, after being broken, see, where is our lower high? There. Here could have entered either here or after the break of this lower high, you could have entered as well. So right now, there the top where the trend line is on a smaller time frame perspective. If you remember, where the trend line as well. If you go to a, yeah, with the trend line like that. Bam, break here, you could have entered, or there, you could have also entered because this was a key level. So that is the thing, that is the thing. That is the thing, that is what we are currently looking at. That is what we are currently looking at. That is what we are currently looking at on the 4-hour perspective. So right now, all we want to happen is the break of this channel. The break of this channel will give us buying opportunities. There on that key level, we need to see the reaction. Is it going to come back down and go back up? We simply need to look at the reaction there. And I think it will almost be, depending on the momentum now, it can take either a day to reach here or even less than a day, depending on the momentum now. Right, so that trend line is a key trend line now. The one that we currently have on a 4-hour perspective. It's a very, very key trend line. That trend line, it's a key trend line. That is a key trend line. So we want also a shift in market structure. As I said, these lower highs, lower lows, we want to see a shift. Lower high, lower low, lower high. Lower low. So now, this one as well, it's a lower low because it's lower than this. We now need to mark the lower high as well here, which is most probably this area. So we want a break there. We want the break, then something like this. break, retest, then boom. So that is a key level, that one. This is a key area here, this lower high. It's a key area. It's a very key area, that one. So it's now waiting time. Now I can say it's waiting time. I can say it's simply waiting time now to wait for price to break this area or this trend line. So we simply wait now, we simply wait. So here, price can even, if it decides to come and break this channel, you need to relax and wait for the pullback and rejection. If it rejects here, maybe that's when it can continue selling. But if it doesn't, it can actually fake out, come back in, then do what we were expecting it to do. That can also happen. They are also aware of how people think. So that trend line, it's a key trend line, very key trend line right now. So it's now waiting time now, waiting time. One can also add the 20 moving average. It's simply, it also guides for entries. This is the 20 moving average, also good for entries, and as well as the 50, but I don't need to put them all. The 20 is much more, it can give you earlier ones than the 50. So the 20 moving average, if you check already where price is rejecting, it touched the 20 moving average, which also happens to be my trend line there. So these things, you can actually see that they work in Confluence. My trend line is actually working in Confluence with this moving average. So once this trend line is broken, it's to also be the break of this moving average. So this is what we currently have, lower high there. Then as for yesterday, I think there was an opportunity. There were opportunities that one could have taken advantage of. For example, if you check these lows here, after this break, then went back inside after this break, then came back to retest. Here, upon the retest, one could have even sold. On a smaller time frame, you could have even sold your stop loss just above there. Then your TP, you're looking at the bottom of the channel there. That was just an easy trade. An easy trade. So now we are here. They're saying we have a lower high. With that lower high, we also have a lower low. So these two guys here, we just need to notice and be watchful now how price is going to respond. Is it going to break here, going from a lower low, continue going down, or it's going to respect this channel that we saw and the trend line as well that we saw on the daily time frame? So even the way today's daily candle is going to close is going to say a lot. The way today's daily candle is going to close is also going to say a lot. Is it going to close inside our trend line or outside our trend line? Because if it closes outside our trend line, we have a bit of a problem unless it's a fake out. So right now, we're looking forward to a shift in market structure. It has to happen. If you check here, there was no shift in market structure. No possible shift in market structure. The same areas, the same levels were being maintained. They were not even being broken. So we want that shift. We want that shift in market structure. Let's just check on a 30-minute time frame what is possibly happening. So here someone can even decide to not use this trend line all the way from the top. Here someone is not able to draw this trend line all the way from the top there. You can simply also draw according to the 30-minute current channel that we let me just show you how you can also do it. Let me change this to white. So here, what one can also do, you can also use the current touch there. You can also draw it like that. First touch, second touch, third touch, rejected. So if it breaks now, it will actually be an opportunity now for us. It will actually be an opportunity now for us. Once we break there. So here, we also need to identify what we call, if you remember, what we call, for example, here, I thought price was going to form if ever price managed to form a head and shoulder, it didn't manage here because the right shoulder didn't form here. It was supposed to go back. If it went back up here, it was a complete setup for a head and shoulder. Even here and right now, if ever price forms either a head and shoulder or a double bottom, that would be good for us. That would be good for us. Once this happens, it's simply now, it's simply time now. The time has now come. It's now time. It will now be time to go up now. Once you see bullish candlestick, bullish chart patterns kicking in, once you see bullish chart patterns kicking in, know that the time has come. So right now, we are all about buying opportunities now. We're all about looking for buying opportunities, buying opportunities, buying opportunities. Buying opportunities. So these are also channels that we expect to be broken as price will be going up. The first trend line here, then that next one as well, we expect it to be broken. Those are simply opportunities for entry. You see this one broken, opportunity for entry. This one broken, retested, opportunity for entry. So here we are, here we are, here we are. Here we are. So now that breakout, we want the breakout and the possible retest. Breakout, retest, then we go. So I'm either looking at a head and shoulder, inverted head and shoulder, or a simple retest, then we enter. We enter. So now, so as you will be entering on the smaller time frames, also look out on the higher time frames. We also want that shift in market structure to happen. On the 4-hour, I showed you the area that we're expecting price to break, which is our lower high. We want those areas broken. We want those areas broken, because according to a higher time frame, they can also give you more entries as well. They can also determine where to enter more entries as well. So even here, if you check according to 15-minute, one could have even taken a very short-term trade even here. See this channel here, this small trend line here, broken, retested, then boom, went to the next level there. So this one was also a short-term trade that one could have taken. One could have even made money there. This is almost more than 2 hours or so of holding that. Then now the break here, we also expect some possible buys and push to the next level before we break the next level. Once that next level is broken, simply more entry points, more entry points. So right now, our entry points for the buys, we're looking at that area, maybe this area as well, since it's a lower high, and also that area as well. So you just need to wait for price to respond first, then you respond according to what price would have done. So those are simply entry points according to a smaller time frame perspective. First target back to that area, back here. First target is back here. Once it's back there, we'll look at what to do. So you can also include your Fibonacci's. Once price moves, you also can add your Fibonacci's. Let's say here price moves from this low, I don't know to what level, either to that level, it can move there, then come back to around 50% or 61.8. It's simply an opportunity for entry as well. Simply an opportunity for your entry. Simply an opportunity for your entries. 50%, 61.8, you're in. Then we look at how price will respond to this next trend line. Because this is also a channel. Once we break that one, we're looking forward all the way to our first target, which is there. So VIX, that is the current lookout for the day. That is the current lookout for the day. Any questions? Any questions? Any questions? Is it clear?
Yeah.
Okay. So that's
Clear.
what we're currently looking forward to. That's 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 what we're currently looking forward to. So this area is also a key area. Once price gets there, just look at the reaction. The breaks is good for us because it can actually form point A, point B, then maybe pull back. That can also happen. It can also do like this on a 4-hour time frame. It can also do like this. Point A, point B, then pull back, then we'll go. That can also happen on a 4-hour time frame, whereby price pushes, breaks, comes all the way here, then pull back to this area. Around the 50, and the 61.8. Price can do that. So just have all those things with you, and once it's time, it's time. Once it's time to enter, it's time to enter. You don't think twice.
Don't pour number kana maili walikuwa nongofona
Right, so here we are. Here we are. This trend line is no longer relevant since it was broken already, this one that we had there. So this one now is the next relevant one according to a smaller time frame. That trend line is also a relevant trend line. We're looking forward to the break and the retest. Then we enter the break, the retest, we enter, or the pullbacks on the Fibonacci, we enter as well. So so that is it. That is it. That is it. Here, one can also mark this area here. For other people who always want to be inside earlier, but you just need to be cautious of what you'll be doing. So that area as well, it's also a significant area because it's a level. It's a mini level on a smaller time frame. It's a mini level. Price can actually do some things respecting that level. So that level as well, you can look at it. This was a lower high there, lower low. Came back to this lower high, bounced on the lower high, bounced on the lower high there. So same highs, price is still maintaining the same lower high there. This is a lower low, broken, made a lower low, but after that lower low, price came back to this high. So market structure already hasn't shifted. We simply need to see that shift. That shift, we actually need to see it. The shift in market structure. We need to see it first. Is price going to come back down and form maybe a double bottom or what? We simply now need to wait. Simply now need to wait and see how price is going to move. Then we respond according to how price will move. If it comes back down and actually respects this zone, we will enter upon the rejection. Something like this. We want a rejection, something like this. Then we enter, our stop losses will just be below this area like this. That's a very small stop loss, if you ask me. This is a $2 stop loss, imagine. Just from here to here. $2 stop loss with the minimum lot size. So these are entries that one can even enter as 0.005 because you know that I'm risking only $10. That is depending now on one's account size. Or either a 0.002 or whatever. Because this stop loss was only a $2 stop loss with the minimum lot size. Just this entry alone. From that lower high to that, from that lower low to that lower high. And one could have made $10 with the minimum lot size, $10 with the minimum lot size, risking $2. So even risking $4, you could have made 20, risking $10, you could have made 50. So that's just how you apply risk management. This is good, especially if you have a laptop. You actually know that I'm risking this specific amount of money. But whenever you're using a phone, it's risky now because you don't know how much is the stop loss. You don't know how much is the stop loss. It's riskier.
True.
So there we are now. There we are. If price comes from the respects here, it will be good for us. We'll enter. Or is it going to come and break? Then come back inside, then go, then come back, then go. Whichever way we are ready. Whichever way we are ready. Whichever way we are ready. We are ready, we are prepared. Everything is ready. Everything, we are ready. We are ready for it. Either it's going to form an very head and shoulder on a smaller time frame. We'll enter. We'll enter. We'll enter. So that is it. That is it, my Jew. That is it.
Okay, I'm seeing it.
Okay.